Advantest 6857, Beginner's Guide. If you have ever wondered who tests the AI chips that power ChatGPT, the answer might surprise you. It is a Japanese company called Advantest, and almost every advanced chip that comes out of TSMC's factories gets poked, prodded, and measured by an Advantest machine before it is shipped. This guide is educational only. Nothing here is investment advice, but by the end you will understand what Advantest actually does, who it competes with, and why it has grown so much over the last 5 years. So, what does Advantest actually do? In one sentence, Advantest builds the giant machines that test semiconductors, the chips inside your phone, your laptop, your car, and increasingly the data centers running artificial intelligence. These machines are called testers, or AT for short, which stands for Automated Test Equipment. When TSMC, Samsung, or Intel finish making a chip, they cannot just ship it, they have to run electricity through it, check that every transistor works, and confirm it hits its speed targets. That is what an Advantest tester does, often in just a few seconds per chip. The company has essentially one business, semiconductor test equipment, but it sells a few different product lines. The biggest one by far is SoC testers, which stands for System-on-Chip testers. These handle the most complex chips, like NVIDIA's AI accelerators or Apple's iPhone processors. SoC testers brought in about 1.13 trillion yen in fiscal year 2025, that is the equivalent of roughly $7.5 billion, and that one product line alone makes up 68% of company revenue. The second product line is memory testers, for DRAM and flash memory chips, which makes up 15%. The rest is test handlers, the robots that move chips through the tester, device interfaces, and support services. About half of all revenue comes from Taiwan, because that is where TSMC, the world's largest chipmaker, lives. So, who does Advantest compete with, and how does it win? In SoC testers, the market is basically a two-horse race between Advantest and a US company called Teradyne. Advantest holds about 66% market share and Teradyne about 28%, with a handful of smaller players sharing what is left. In memory testers, Advantest has 61% and Teradyne has roughly 30%. So when people talk about who tests the world's chips, they really mean these two companies. What gives Advantest its moat, and moat is just a casual word for competitive advantage, the thing that keeps competitors from catching up, comes down to 3 things. First, switching costs. Advantest's flagship platform, called the V93000, is the de facto standard at every major foundry and at the packaging companies that finish off the chips. Once a customer like TSMC writes a test program for a specific chip on the V93000, switching to a competitor means rewriting all that software and requalifying the whole process, which takes 12 to 18 months per design. Most customers just do not bother. Second, the cost of entry is brutal. Building a new tester platform takes $3 to $5 billion in R&D and another 5 to 10 years to win customer trust. That is why nobody new shows up. Third, scale. Advantest spends about 78 billion yen a year on research, which is roughly 7% of sales, and that funds the next generation test technology for things like high-bandwidth memory and silicon photonics. Operating margin hit 44% last year. Return on equity is around 58%, and the company is sitting on net cash, meaning more cash than debt, which lets them outinvest everybody else. What are the key drivers for the business over the past 5 years? 3 forces stand out, and they all link back to artificial intelligence. The first is the explosion in the tester market itself. The total addressable market, which is just industry jargon for how big the pie is, went from $4.4 billion in calendar 2023 to $6 billion in 2024, and then to $9 billion in 2025. That is a 50% jump in 1 year. Why? Because AI accelerators, the chips NVIDIA and others sell to data centers, need 3 to 5 times more testing than a normal chip. They have stacked memory called HBM, multiple chiplets glued together, and have to be tested at full speed, not just for basic function. More test work per chip means more demand for testers. The second driver is market share gains. Advantest's overall tester share went from 58% in 2023 to 65% in 2025, a 7-point jump in 2 years. In SoC testers specifically, share went from 56% to 66%. Translation: Advantest is not just riding the wave, it is taking share from Teradyne in the segment that matters most. The third driver is capacity expansion and capital returns. 5 years ago, Advantest could build about 3,000 testers a year. They are now at 5,000, heading to 7,500, with a target of 10,000 a year by calendar 2028 to 2029. Meanwhile, they generated record free cash flow of roughly 300 billion yen in fiscal 2025 and returned a big chunk of it to shareholders through buybacks and a 51% dividend increase. So you have a market that is growing, share that is consolidating in Advantest's favor, and a company that is investing for the next leg while still returning cash. To wrap up, Advantest is the world's #1 maker of the machines that test semiconductors, especially the AI chips coming out of TSMC and the memory chips coming out of Samsung and SK Hynix. It is essentially a duopoly with Teradyne, and the AI build-out is currently driving the strongest demand the industry has ever seen. If you want to follow this company as a learner, watch the AI test market, especially demand from hyperscalers and the move towards silicon photonics and high-bandwidth memory, because that is what determines how much testing the world needs. Again, this is educational only, not investment advice, but now you know what Advantest actually does and why it matters.